Okay, guys, good evening. Good evening. Once again, we are here live with you on today's Trading Digest. Right, so we're going to look into the markets in the coming week, what we can find, and spot some opportunities. So just bear with me, and also if you're joining me here today, and then you have any pair that you want me to have a look, you can pop it in the chat and then I'll do just that. Once again, welcome to today's session of Trading Digest. And I believe by the time we finish today's session, we will all be inspired and filled with some insight for the week. All right, so let's look at DSY for the stats. So this is the dollar index. Okay, so let me know if you can hear me loud and clear once again from your end. All right. Okay, so let's start with DSY. So the currency with the DSY. So if the DSY is pushing downwards, definitely the euro dollar will also be pushing downwards. Okay, so we'll look at that, and then so this is what we have on the daily time frame. And I think we've been doing some hard work here in the past. So yeah, as we can see here, in the past we had this area coming to test this zone, pushing up and then causing a break of structure. So we mark this area here as the origin of this break of structure. So the reason why this on the daily time frame, so the reason being that price most likely consolidated at this level where we can see this origin marked here. So if we go on the smaller time frame, that will be much clearer. At the moment I'm on the daily time frame, so you can see price came to this level and then took off from here, broke another structure here, so with this structure broken, the origin of this one was also been marked here, and we can see how price has come back to tap in there and seeing some rejections from here. Okay, so let's push down to slower time frames on the DSY. So as we can see, this is the zone, the origin of the move. So we can see we had a push up here, leaving this gap here, kind of inefficiency here, or imbalance as well, leaving this gap here, pushing up, but the actual move that caused this break of structure started from here. So if anything, we came back, tap into this, and then we're showing signs of pushing up. So from this point on, we could also do mark the areas, the most likely area within this price action that we could expect price revisiting there or pushing up to the upside. Right, so we can see here that this is the 4-hour time frame. We had this bullish engulfing after we had the tap in. Price pushed up at this down close candle here, and then we currently have a bullish engulfing candle. So there's a high chance we could continue the up push. So with this up push, starting from the 4-hour time frame, we can see that we had this break of structure right here on the 4-hour time frame. Break of structure, or if you term it change of character. Yeah, if we go on the smaller time frame, probably we'll have a change of character somewhere here. But currently on the 4-hour time frame, we're identifying this to be the major area of swing low that was put in after we made this down push, and then we pushed up again. So this gave us a very nice retest, or double top as we may call it, or better say the second leg. We had the second leg here, and then we pushed down from there back to the zone. So from this, when we had this break of structure, all we needed to do is to mark our zone and patiently wait for price to revisit here. So after this revisit, the plan is to get into this trade here to the upside. So now, if this is a trade going to the upside, where is the most likely areas that we can identify on this particular pair? So we had this break of structure here. So from this break of structure, we can see that we had this area that price halted here before the down push. So we can pick on this as our supply zone. So we're taking the last indecision candle before the impulse move that caused the break of structure. So attached to this, we also have an area of imbalance, making our zone much more valid. An area of imbalance. So this is to be marked as supply zone. Okay, supply zone. Right, so this could be the most initial target we could target, taking a trade from this zone to this zone. Min 2. And then I know there's also some inefficiencies right here from this zone resting above here. So we have this imbalance right here as well. So price could also be targeting to fully take out this internal range of liquidity resting here as well. But nevertheless, this is already gone. So if you get any entry from here, probably you could be targeting this as your initial TP1 or target 1, and then target 2 could be here. All right, so this is on the DSY. So looking at this, DSY is looking to be pointing to the upside. So if DSY is pointing to the upside, definitely. Okay. All right, we're back. Okay. All right, we're back. We're back online. Okay. So yeah, so just as we're looking at the DSY pushing up, we can see that exactly what we're looking at, or the opposite, exactly the opposite of what we're looking at is what we have on the euro dollar. So on the DSY, we can see this move here from here to here, and then if I change to the euro dollar, we have similar move. So this is going to showing up sign, targeting this area, and on the euro dollar is the same thing. We targeting, this is the move. Let me see if I can pick this. Nope. So on the euro dollar, we have the opposite of what we're seen on the DSY, because if the DSY is going down, euro dollar will also be going down. Okay, so with this as well, we can see we had this on the 4-hour time frame. So let's say we had, this is the initial change of character that was put in. So with this put in, the area that we are interested is here. This is the last, let's say this is the last indecision candle that was put in. So that becomes a demand zone, and attached to this demand zone we can see this wide area of imbalance. So with this wide area, since we're looking to the upside, if price should if price is going up, or if we have euro dollar going to be to the upside, we will probably be targeting 50% of this big area rather than the whole price coming all the way down here. So so first of all, we have this area as well to consider. We have this break of structure area to consider. Break of structure. So this is an area we can also target. So this on the 4-hour time frame. So this break of structure, we can say it's also originated from this area here, because we have this on the 4-hour time frame. So we had a kind of a hold up before the up move here. So we target using the last indecision candle. So I'll pick it on this one here. This one here to be our demand area. So we also have some imbalance right above here, which we can see we had a tap in. So from this point on, market is very efficient. Looking at the 4-hour time frame, it's looking very efficient in any way, looking at the 4-hour time frame. So again, we can also identify this area. We can also identify this price put in this high here, and then this high we had a break of structure there as well. We had this break of structure here. So with this break of structure, the origin will put it to the last indecision candle. So if we're talking about the last indecision candle before the up move that caused the break of structure, we'll pick on this candle right from here to there. So attached to this area we have another imbalance attached to it. Imbalance attached to it. So already we can see that we have had a revisit to this area. Price is in this zone already, and so as the market opens, we'll see, because on here we can see that we were on in an we began this up move. We began this up move, and we broke this structure. So with this structure broken, we can expect price to turn around from this point on. Targeting this initial areas again, where it's already tapped in from there before. So we can see from here that we've already had this price action here, where we tapped into this previous zone here, and then we pushed away, came back to tap into it again, giving us the second leg or double bottom as we call it. So from this signifies a reversal sign of the move, of the downward move. So we could expect price to turn around from here to the upside. So as the market open, we'll watch and see how price will react from here, or the reaction, the response we'll get from here. If we continue to get some rejection from here, and especially if we get a bullish engulfing from this point on, we could target this high from this particular pair. All right, let's look at so this is on the 4-hour time frame. If we go down to the smaller time frame, 1 hour, this is what we can see here. So on the 1 hour, we can also identify that we can further narrow or refine our zone. So we can further refine our zone to this particular candle here. Oops. Come on. All right. So let's refine our zone. We'll pick it on this one here. Yeah, so that's the refined zone that we spotted on the 1 hour time frame. So over here on the 1 hour time frame, we can hardly see any area of inefficiency. We can hardly see any area of inefficiency. So reading the structure below here as well, it's fairly efficient. There's no, or unless there is a small area here that could attract price. So at this point in time, if we should look for any entry here, that should be done with a confirmation entry. That should be done with a confirmation entry, because we can see there's some zones that we identified below here, some imbalance areas that we can identify here. So if I should put this here, so there's a tiny area of imbalance resting below here. So that could be a draw on liquidity, and then we can see liquidity resting here, there, and then along the way down. So apart from all these, we can also see there's some imbalances here as well, and then here. So if you're looking for any buy from this point, it has to be with a confirmation entry, not just saying it's gotten into a zone and then you want to take it from there. You want to take it from there. So I will say just let's be extra vigilant, because even at this area, I'm not seeing any imbalance at this point. So I wouldn't say this is a valid area to take the trade from. So as we spotted on the DSY, having a potential to go up, if the DSY has a potential to go up, then this move we see here also could have a potential to go further down to this zone, even though it looks very bullish from this point. So I believe it came to, we had this area, we had the break of structure here, we had this break of structure right here, break of structure right there. So with this break of structure, if we originate it, if we want to see the origin of this move that caused the break of structure, we will then pick on this last indecision candle from there and then extend it to the right. So we can see that that is the zone that price tapped into and then turn around. That will be supply zone, possibly. So this is the area price has currently tapped into and turned around. So there's a high chance if DSY is showing signs of pushing up, then we could also expect this to further go down to revisit these zones. So as I said, looking for any buys here should be done with a confirmation entry. Other than that, this is the most likely thing we could expect happening, because we have all this liquidity area here that will expect price to clear this liquidity, internal range of liquidity, and then another one there. So we could expect price coming, making something like this, or targeting up to this area, or clearing this area of liquidity and then pushing up or from. So currently this is what we should be looking out for. So other than that, if we get a confirmation entry from here, let me put this properly. If we get a confirmation entry from here, so there, and then we have this high taken, we put in this high here. So if we have this high taken out, we expect price to come back to some form of origin that will be created, and then we aim to this high again. So the entry for a confirmation entry the location for confirmation entry should be like somewhere of this nature. So that will depend how price reacts. So if anything, you want to go in for a buy, that should be, we should have this high taken out. That was the last high that was put in. So if we have this area taken out as our break of structure, then we expect price to pull back. So once price pull back for this retest, this is the area we want to engage in to the upside. Other than that, as DSY is showing signs of pushing down, we could also look for something of this sort going down to clear this internal range of liquidities resting here. All right, so as I said before, we are here to build some narrative. If this happens, then we'll do this. If this happens, then we'll do this. So that's, we building two-sided narrative. So as we always say, no one knows what will happen next. We only trade what we see. So if we get a confirmation entry, a break above this high, and then we have a pullback, then we're going to take the trade to the upside. Or if price shows further signs of going down, we can look for entries to push to follow it to the downside. If we get maybe a bearish, we've already looking at this one here. This is on the 1 hour candle. So looking at this, we already have a bearish engulfing candle that has completely pushed down to this low, but hasn't completely taken out these liquidity resting here. So we could expect price, so once it opens, when market opens, we could expect price pushing up a little bit, then turning around to the upside again, because we've already had this indication here of a bearish engulfing candle telling us we want to go down. We want to go down. So with this, as we can see here, currently we can see that we have had this break of structure right here, break of structure right there. So with this break of structure, as we can see, the area we can identify to be our target zone could be here. Target this here, So that will be the supply zone. We can identify this, and then attached to this we can see that there's this imbalance area here, but that's the last candle that was put in before the market closed. So when the market reopens, we will see if we have a pushback. So that pushback will determine if we want to further take it to the downside. But already we have this break of structure, so if anything we could have price doing this back to this origin, closing this imbalance here, then from there we take it to the south. We take it to the south as if marked there. Okay, let me take this off, mark this again. So if we have this played out, we could expect price to do this, clearing out the areas of imbalances below here if we aim to go down. So if anything at all, we want to enjoy the ride downwards, this is the zone that we could be expecting to take the entry from to the downside. Okay, so that is the euro dollar. Let's look at gold. After that we'll go to the, let's look at gold. Okay, as I said, I believe we had a wonderful time trading gold last week. Just as I mentioned in our last trading digest last Sunday, we were somewhere here. Where were we last Sunday? Friday we're here. Yeah, so Sunday, this was the open candle. So all this hadn't happened since our last session. From this point on, let me draw it. So all this wasn't put in, all this wasn't there since our last session. So our last session, this is the data we had, and I remember telling us that gold is considered as a safe haven where we can take positions in it and then just ride it to the upside. So from this time last Sunday, we had this push all the way up here, and then we came back. So from where we are now in terms of the movement of gold, we've had price. I also talked about the odd 50 where we can put in these network. Can you hear me loud and clear? Okay. All right, so we had this key level put in. So we were here last week, and then we pushed up to break above this, the 4,150 level, and then from there I said this is the next target area, the 4,350, and then within the week we pushed and smashed that level as well. So from this level, the next key level we can aim for, is 4,550. That's the next key level to target. 4,550 coordinates. Come on. Yeah. Okay, so currently we are at we had price pushing to 4,350 key level, and then we had a pushback. So on Friday, as I saw this on the on when I saw this happening, when I checked on the 4-hour, I saw this bullish and bearish engulfing candle here. So with this in mind, as I've already said, with this bullish engulfing candle from this zone, from this key level, I didn't have any option than to sell the markets, and that is what happened. That is what happened from here to here. That is what happened, because we've already made the move to break to move to the 4,350 level, and then from there, if we should see any sign of a reversal, it's a very key zone to consider it. So from here, we might have a play around this coming week. We might have a play around this coming week within this zone a bit. We might have a play around within this zone a bit, and then we'll break above to the next zone, which is the 4,550 key level. So that is what I'm looking at. Other than that, so if we have this, then we keep on pushing. Other than that, there are a whole lot of zones that we can mark out below here for price to target. But as we can see, gold has been in this bullish run, crazy bullish run that we have been experiencing of late. So that is what I'm looking at. That is what my take is on gold. So as I said earlier on, we trade what we see. So currently what I'm seeing here on gold is, I can clearly see this bullish engulfing candle right here. Bullish engulfing candle right here. So this happens to be the first leg of the price action from here. If we're looking at it, this is our first leg of price action, and then we had this move here. So we could target price clearing out. It's already made this move here, so we could expect price giving us if we're truly going to have a reversal from here, we could expect price giving us the second leg. Then from the second leg, that is where we might continue to have this play and then break out to the upside. So these are scenarios that we can identify the high possibility of it happening. So if we're going to have a reversal, this is what we expect. We expect to see some form of second leg action, price action, then we push from there. So currently we have, on the 1 hour time frame, we have this bullish engulfing candle right here. So if we considering if we go to maybe 15-minute time frame, we can at least identify that we've had this area as a high that was put in before, that has currently been taken out. So that's a change of character. This is a change of character right there. So with this change of character that we identified, this is the last indecision candle that was put in before this move that caused the change of character. So this definitely becomes the origin. So if anything at all, we could expect price pushing back to clear this imbalance here or close to this area, then to the upside. So we can expect something like of this nature, then to the upside. As I said again, we could also experience some sideways movement within this range before we break out of this zone. We break out of this zone. So nevertheless, we only trade what we see. So what we're going to be seeing, or what price will be calling us off on, that's what we will be expecting to work with. That's what we'll be expecting to work with. So as we can see here on the 15 minutes, we can also see something different here. On the 15 minutes, we put in this low, we pushed up and gave this low point here. So with this low point, we pushed up again and then came back to fill this imbalance that was left here. So again, we've broken a structure, so we could expect that to continue if we want if we're going to be going to the upside. If we're going to be going to the upside, so we have this playing out here, where some people will call it head and shoulder. This is the left shoulder, this is the head, and this is the right shoulder. So seeing this pattern formed could be something to the upside. Something to the upside. Okay, so that is it on gold. So let's watch out and then, oops, what's happening? Delete. Let's watch out on this and then we see how best we can take advantage of it. So as we see the break of structure, we have to take it to the origin. We have to find the origin and then patiently wait for entries from there. Wait for our entries from there. So this is how I'm looking at gold currently. This is how I'm looking at gold currently. So with the upside movement, if we break above this key level, which we have already done before, if we break above this area, this is the next area we're going to be targeting. This is the next area we're going to be targeting. So we had a very nice bullish move since our last session on Sunday, which, let's see, we had about okay, where are we? Okay, so from last Sunday to today, or to where price got to, we put in how many? About 360 points from last Sunday to where price got to, above the 350 key level. We put in a 360 points. So that was quite a move. So from here to the next key level, let's see what is there. From here to the next key level, from where we are at to the next key level, we're looking at around 300 points as well. 300 points. So let's be on the watch out and then take advantage of you know how you can manage it. This is how you can manage trading gold with these key levels. So from one zone, your target is the next area, and then if you go through this, if you go through the chart, you almost see. So this, if I should put this here, 950. Okay, so this zone here, where we were at last Sunday, was the 3,950 key level, and then from there we marched straight to the next key level, and then within that same week we marched straight to the next key level, and then before price closed, or before market closed, we pushed down a bit, which is normal, to 750. 750. 4,750 an ounce. So these are the key levels. So if we broke through 2 key levels last week, there's a high probability that this coming week we could also break through these 2 key levels as gold make its way to 5,000 per ounce. 5,000 per ounce. So 5,000 per ounce. That is what my anticipation is, that we're going to hit this level soon. 5,000 per ounce. Okay, so we have this is what we have, and this is where we are. So just imagine if you manage to get yourself into a trade like this, you plant yourself somewhere here, and then we hit this high. Look at all the money that could be made. The same way I talked about this last week. Last week we were here, and then I told us that this is for the upside. I showed you how gold has been on the upside. It's been moving up and up and up in the past years. So there's a high chance, there's a high probability that we could hit these levels. But as I said, we could move sideways within this zone for some time before maybe we break above. But nevertheless, gold has been moving up and up and up. So let's look into that and then take full advantage of it. Don't be on the side, sit on the sideways and just observe and then miss out on these moves. As I said, gold is considered as a safe haven as well. With that said, we move straight to BTC. BTC. Wow. Yes, we have on the screen Bitcoin. Okay. Okay, so Bitcoin is still pushing up. So on here, on the daily time frame, we on Friday 10th October we put in this low. So I think I was with some guys, I was explaining to some guys that with this long wick put in, there's a high chance that price will come back to do some filling of this wick that was put in here, and that's exactly what it has done. Then on the daily we have a bullish engulfing candle. But if we drop down to a 4-hour time frame, the 4-hour time frame has already given us a bullish engulfing candle. We had this sideways movement creating equal lows and equal highs, and then see what happened. Then we had a sweep of liquidity with this bullish candle here. We came first to sell, we sell and swept all the liquidity resting here, and then put in a bullish engulfing candle. So if you are a BTC trader watching this, because above here we also have this area of imbalance right here, sitting here. So even at all, if price wants to continue going down, it might probably will fill this imbalance here and then push down here. But again, if we look at the market structure, we can see that we put in this low, put in this high. So this in itself considered it to be the second leg. So once we have the second leg, that's it's signifying to us that it's a possible reversal. in the markets, a possible reversal in the market. So if we break above here, we could expect a retest to this zone. So other than that, if you want to play it very safe, you could wait for price to break above this high that was put in. So once we break above this high, you identify or you mark your zone, your imbalance demand zone, and then for the upside. Yeah, so this is how I'm looking at BTC. Yes, of course, BTC has also got some areas that's also pending below, but it's been in a bullish run. It hasn't cleared almost all the areas in the past before. So over here, so we've tackled this. If we look at this price movement that came down here tackled this area. So we had this last indecision candle here. Oh, come on. Oops. We had this last indecision candle here. So that becomes our demand zone. So attached to this demand zone, we had this imbalance area. Oops. We had this imbalance area right here. Imbalance demand zone. So how many days did it take for us to come back to this zone? So this happened, let's mark this, let's see how many days. So we had this put in back in so it says this was put in back in Sunday 22nd June, and then we had a revisit of this zone on Friday 10th October. How many days? 110 days. It may take long, but surely price will do what it intends to do. So you may say it may never come back there. This was put in June, and in October this was fulfilled. So looking at this price action, price is just not moving or just not finding somewhere to tap in. It came for a purpose, and the purpose was to fill this imbalance demand zone. Tapped into it first time, second time, then to the upside. So that's giving us a second leg. It's a sure reversal sign that we could expect price to make its way to the upside. So if you've probably been engaging in a downtrend or been looking at this to catch some selling, just be careful. All right, so that is what we have on BTC. This is on the daily time frame. So if we go further down, so as we can see on the daily, this is the true picture of it. Let me move this away. You can see how price came all the way to tap and fill the imbalance that was left here back in June. With all this price action, I say I have a place to go, and then said this place I'm going there on the 10th of October and price surely came back and then filled this, pushed up, came back, give us the second leg, and then now we have the second leg formed. So with this second leg, we've been given the bullish engulfing. So with this, as I've seen here, I'll be looking to be going to the upside, looking to be going to the upside rather than downside. So in any way, you always want to be trading what you see. You always want to be trading what you see. So for me, this is what I'm seeing here. I see to be more of a bullish run than to be selling this, as we've had go in for a buy from here with stop loss somewhere there, targeting probably this high first of all. Then if I see price further pushing up, I could maybe trail my stop as it make its way up. But this, from this point on, this is the most likely area price could be targeting. Then from here we move to the next place that it wants to go. But as I see on BTC, this is what I see. This is what I see on BTC now. Okay, so and then this also completes or aligns with our strategy. Whilst we had some form of consolidation here, and after the consolidation we can clearly see we had a sweep of liquidity. If we go on the 15-minute time frame, that will be even much clearer. So equal lows put in here, equal lows, wherever you call this, some equal lows here, equal lows there. So whatever it is, there are equal lows here, and these are all liquidity areas that we had this move coming to clear all this liquidity area. So once we have this liquidity cleared, the next thing we look for is distribution or the up move. Okay, so that is what I have. That's the take on BTC. So that's what I see on BTC. Any question at all? Any other pair you want me to have a look? Any other pair you want me to have a look at? Okay. So we are just 2 minutes away from the hour. So if you have any pair you want me to have a look, just pop it in the chats and I will do just that. I'll do just that. Okay. All right, so guys, I wish you all the best in this coming week of trading. As I always say, trade what you see. Trade what you see, and also applying proper risk management. Trade what you see and also applying proper risk management. Do not over leverage. Remember, small gains add up. Small gains add up. Small gains add up. So just take it easy. Slow is faster in trading. If you move slow, or if you think your lot size is too tiny, that will add up, and then before you know it, you'll be gaining some grounds that you never thought possible. So just take it easy and then trade with caution. Don't over leverage. Okay, thank you so much for joining me here today, and I hope to catch you up next Sunday. Until then, it's bye.